Hey everyone, and thanks for jumping back into the Cryptoverse. This is a premium only live stream. I'm just gonna spend a couple minutes to grab the file for this, and then we will get started. Okay. All right, I just posted the link in the Telegram alerts channel, so I'll just wait for people to join. So anyways, the point of this video is just to look at some of the risk levels, see what's going on in the market, and potentially answer any questions that you guys might have. So generally, right now, the risk on the market as a whole has come down, right? It has come down a lot. And one of the things that I've said before is that we would want to see this risk, so the total crypto market cap risk, less than 0.7, theoretically speaking, right? Theoretically speaking, to enter the market. So, if you're riskier than me, which I know some of you are, there are some, depending on what your risk tolerance is, maybe some of these are in accumulation territory right now. For instance, maybe you want to buy ADA at less than 0.5 risk, or maybe you want to buy Link at less than 0.6, or Ethereum at less than 0.6. And this is one of the most common questions I get is, well, if you're late to the party, how do you navigate that? And there's a lot of people on the premium list that it's great and all to look back in time and see what could have been if they had been here, back in March. But if they hadn't, then, what is an alternative? Well, typically to these people, I say, well, one thing you could do is you could just accumulate, but maybe you could be more aggressive, right? You could be slightly more aggressive because you're late to the show, you're late to the party, and you recognize that, you missed probably the best opportunity for the market cycle back in March. And if and as I've said before, I think it's too risky not to hold Bitcoin over the long term. And so you could take an approach where you buy at lower risk levels. So at least the one thing we can say, that at least the total crypto market cap risk is less than 0.7. Am I buying here? No, absolutely not. But it's not financial advice, and again, this is my own strategy for the market. And one of the reasons this is a good strategy for me is because when you look at the price and you see it doing this, where it's dumping down to 29,000, like this stuff, it just becomes so irrelevant, right? Like, who cares? Looking at a $31,000 Bitcoin, it's still 2.5 times the price that I last bought Bitcoin at. And I know it is for many of you as well. And so it makes it so that it doesn't really matter if it comes back down, because you're still well within profit. If on the other hand, you were buying at 42K or something, then it becomes a lot harder to navigate it, because you're already down 25% or so. And right, if you're down 25%, it can get scary, and then you might end up selling when you're down 25%. But again, that goes against the idea of all having like risk tolerance. So again, this strategy is not necessarily meant to chase the market continuously, right? It's not meant to, like just chase the momentum, right? We're not here to just chase the momentum constantly, because as we see, it can change on a dime. We were at 42K, a couple weeks ago, and now it's down to 31K. So these types of moves will happen in a bull market. And the nice thing about the moderate risk tolerance approach is that even with this correction, that from the peak to the bottom has exceeded 30%. In fact, it's 31, almost 32%. Even with a 32% correction, if you followed moderate risk tolerance approach, you're still nowhere near the point where the price is going lower than what you bought it for, okay? And so that's the advantage. And so it helps you navigate the cycle in a bit of a more, strategic manner, right? So that you take advantage of bubbles when they form, but at the same time, you're never just chasing. But with that said, you have to figure out what is an appropriate risk tolerance for you. Do you think that 0.5 for Bitcoin is too low? If you do, then you can always raise it up, and you can say, you know what, I'm gonna buy it up to 0.6 risk, or I'm gonna buy it up to 0.7, and that's the beauty of it, right? It's tailored so that it can go to to whatever your own strategy is. You can tailor it to that, and you can figure out what risk do you want to in fact take. One of the, I don't know if it's been a while since we showed this one, but yeah, so here's an interesting, so I don't know if you guys are aware, but we have this risk strategy dashboard where what you can do is it's all anonymous, by the way. So what you can do is you can always put in the total amount of Bitcoin you own. You can just make up a number, right? It doesn't really matter. But let's just make it easy and say you own 1 Bitcoin, and you think the future projected peak is, let's just say, 100K. The idea of this strategy is to show you various strategies, right? The idea of this dashboard is to show you various strategies. So for instance, right, if you were, and there are some somewhat dubious extrapolations going on over here, so make no mistake about it, it's not meant to be exact. But what it shows you, is if Bitcoin were to go to, say, 100K, and you were selling the same percentage at each risk band, or if you were doing, say, a linear scaling, or if it were an exponential scaling, it shows you what you would theoretically stand to make. And this one would be selling at the beginning of the risk band. This one would be selling at the middle. So the upside for being conservative is that it allows you to take advantage of moves like we saw in 2019, where it goes up to 0.6 risk or so, and then it comes back down. The disadvantage is that you then start selling a bit earlier than you might otherwise want to if the price were to continue moving up more or less monotonically without many corrections. So it shows you various strategies, like if you sell the same percentage at each risk level. If you do a linear scaling, this is the one I do, linear scaling. I obviously don't always do it at the beginning of the band. Sometimes I try to do the middle of the band, or sometimes even the end of the band. But it shows you the collective profits. So like, for instance, if you wanted to do, say, a linear selling strategy at the middle of the risk bands, then it would correspond to, in total, making 52K. And that would be scaling all the way up. If you wanted to scale it exponentially, then it would correspond to a little bit more, because you're doing twice as much on the sales every single time it goes up to a new band. So this is obviously just one strategy. For instance, if you thought the peak was $250,000, it automatically adjusts, and so then you can see, the conservative strategy, selling at, say, 0.45, 0.55, all the way up to 0.95, might yield you 131K. If you were a little bit more moderate and you did not sell in this band and you started selling in this one, then and we went all the way to the top, it would maybe correspond to 143K. If you were more aggressive, etc. And then let's say you went with, say, a super aggressive approach, then it would be 171K. The downside is that the more risky that you want to be, the higher the likelihood that you end up going home with $0 because it never made it to that risk band. So that's sort of the idea. And there's also one with Ethereum too. So you can put in for Ethereum. Like, it looks like someone has put in 528 Ethereum, the projected future peak of $500. That would be somewhat sad because we're already twice that. Let's say $4,000, and you can follow a similar type strategy. And it just gives you some ideas of how you can navigate that. There's also another tab on here called the weighted risk. And what it does for, like, say, a Bella portfolio, Bitcoin, Ethereum, Link, and ADA, you can put in, say, the amount you have, or if you prefer, you can just put in the percentage. It looks like this person put in the percentages such that it sums to 125%. Unfortunately, it doesn't quite work out that way. So, but what you can do is, if you put in, say, the amount of crypto you own, and then it'll show you what the percentages are, and then it shows what your weighted risk is. And so what this does is it just takes the weighted risk from these coins and shows the overall risk on your portfolio. So if imagine one day you come to this spreadsheet and you put in your amounts of your Bitcoin, Ethereum, Link, and ADA portfolio, and it's flashing that your weighted risk is like 0.95, that should be a red flag. Okay, that should be a red flag. So that's generally the idea. We also have something down here called the No One is Perfect portfolio. I made this back a long time ago before, a while back, basically implying that it has more than just Bitcoin, Ethereum, Link, and ADA. And of course we have DOT, but we don't have a risk metric for DOT. And then you can also just calculate your weighted risk, which includes Litecoin, XMR, and XRP in there as well. So make sure you guys check that out if you have not checked that out before. If you guys want, you should be able to find this in the emails and stuff weekly. So yeah, I mean, right now we're at 31K. The nice thing about this is Ether Bitcoin. I mean, look at Ether Bitcoin. It's more like what correction? And this is one of those strategies for, say, people that prefer not really going to fiat, but just going back and forth from Bitcoin to Ethereum with the idea that you just systematically increase that stack. And so this is one way to do that is you just don't worry about what the USD valuation is. You just simply look at the Ethereum Bitcoin valuation, and as you can see, 1 Ether still equals less than 27 Ethereum, even with the dump, right? Even with the dump by Bitcoin, 1 Bitcoin still equals less than 27 Ethereum, and it was only like 3 weeks ago where 1 Bitcoin equaled 40 Ethereum. So that's just something to consider, that Ethereum is still holding up relatively strong against Bitcoin. The valuation is still 0.0375. Last week it closed at 0.034. So in terms of the Ether Bitcoin valuation, it's more so of the mentality of what correction, right? Because it hasn't really had a correction against Bitcoin. It's just more so natural volatility. But this is just one idea. And then also with things like Link, it hasn't really corrected against Bitcoin either. It's still holding up very strong. It's at 62,000 satoshis, and so I think it's still doing quite well. As long as Bitcoin hasn't dumped yet to the to the 20-week or anything. It hasn't dumped yet, and if it holds on here, I don't know that it would, but if it did hold on here, alts could still rally, right? Alts could still rally. Think about what has happened over the last month. Let's just look at what's happened. Bitcoin has trended down. It's been trending down for the last month. And despite the fact that it has trended down, it has not precluded Ethereum from going up 2x, despite the fact that it's been trending down. So just because it's going down does not mean that alts can't run. We've always said that altcoins will have a knee-jerk reaction to Bitcoin in the event of a Bitcoin capitulation. But as long as Bitcoin is holding levels well above the 20-week moving average, altcoins should still be fairly okay, and they are. I mean, Ethereum is still 1169, Link is still 1947, Dot 1650. These are prices that if we had shown you, 10 days ago, and if we said that people are going to be bearish, let's say 15 days ago, people would be bearish at the idea of a $16 and $50 dot. They'd have been like, what are you talking about? Like, people would be bearish at a Ether Bitcoin valuation of 0.037. So it's easy to lose sight of what's going on. But anyways, I mean, Bitcoin has dumped significantly here. It has been trending down. We have bounced off this level before. So we've bounced around this level here. We bounced around it here. We had these wicks below it. We've come down below it now. But I mean, make no mistake, if Bitcoin were to rally back up, even if it were just to this level, there's still a really good chance that alts could continue to rally, and so this is just something to consider. The main thing that I would be cautious about, the main reason I'm cautious with altcoins is because the risk on Bitcoin is still relatively high. Actually, you can see the crypto market cap risk has come back to 0.7, so it's still relatively heated. One of the things we've said is when we're in a bull market, chasing the momentum can pay off, but it's just something that I don't do because I'd rather have a systematic approach. And the reason why I do it is again, it protects you from dumps to the downside, because it just simply does not really matter. If we see dumps down to 29K, 30K, even if we were to go to 20K, it would just present an opportunity at that point, not necessarily something that is going to make us worry. Because again, if you're following, say, a strategy where you're only buying it up to a certain risk level, then theoretically, as long as that risk level isn't 0.716 or 0.7, you're still doing quite well. So for Bitcoin, the 0.5 risk level is still relatively far away. Obviously, there's no guarantee we get there anytime soon, but right now it's sitting at just shy of $18,000. And if we were to adjust for M2, it's shy of $19,000. The 20-week moving average is currently, on the weekly time frame here, it's currently around 19.5, I believe. So on this exchange, it's 19.3. So the Bitcoin bull market support, which ranges from the 20-week SMA to the 21-week EMA, ranges from 19,356 up to 21,790. Obviously, there's a good chance we don't make it there, especially if it's not an instantaneous drop. Like if we do hold it as support whenever we do visit it, it could be a lot higher than it is now, and so we'll just keep that in mind. We'll figure out where it is whenever we drop down to it. But right now, if you guys remember, for those that were on the premium list back in October, we were mainly focusing on buying Bitcoin here. I'm not sure if you guys remember that, but the focus back here in September for 6 weeks was buying Bitcoin over Ethereum. I mean, I did pick up some Ethereum because I like to always pick up some Ethereum when it's in accumulation phase, but we were mostly focusing on Bitcoin because we said, again, that whether it goes up or down or hugs the 20-week, it's likely going to be a better bet for Bitcoin in the short term. And then when Bitcoin went up, we took advantage of all of that systematic accumulation down here and before, and then it was all about DCAing out of Bitcoin into Ethereum and Link and ADA and DOT, and we've seen how well those have performed. Link is just shy of $20, ADA is still over 30 cents, DOT is $16.50, Ethereum is $11.75. So the lower sells went to these other cryptocurrencies. The higher sells actually for me went to stable coins, and I'm just earning interest on those stable coins. Some of them will just already went into the ARKG ETF, the Genomic Revolution ETF, and then some of it will be reserved for the space exploration ETF that'll launch in a few months. But the rest of it is more or less just sitting in stable coins, earning interest right now. So let me just check the chat. So Tom says something about the pi indicator. So let me say something about the pi indicator. You know, when we so a lot of these were created in the last year, right? So it's not that hard to come up with an indicator that can fit, say, 3 or 4 data points. It doesn't mean that the pi cycle indicator won't be valid, and I think it's a tool that is likely decent to just add to your arsenal of tools that you use. But you can't necessarily project that just because historically it has worked that it will continue to work. And the main reason, again, is because it was created a year ago, and so like if we wanted to, we could probably come up with a host of metrics that could time the peak, but that doesn't mean that they'll necessarily time the next one. And so that's just something to be careful about, because yes, it's come maybe within 3 days in the past, but it was never used in the past to project a future peak. Okay, so there's a difference. So we're not saying it won't predict a future peak. We're just saying that it should maybe just be one more tool that you can use. That's the idea. So Ethereum. Okay, so let me just check the chat. Have you ever tried to measure risk? Oh, that was the pi indicator one. If Bitcoin were to drop to the 20-week moving average, would you consider buying at that price even though it's above 0.5 risk, or would you consider that counterproductive to your strategy? I think it depends. I mean, again, the risk levels are dynamic, so by the time we drop to it, the 0.5 risk level could be at the 20-week moving average for all we know. So it's one of those things that I think it's really too hard to say right now. Certainly, if we're at the 20-week, the emotional part would want to come out and hold the line. At the same time, I'm sure I would have a decent amount of buys under it for sure at the 0.5 risk level to in the event of a wick, right? Because even though we've seen wicks below the 20-week moving average before, as long as it's just a wick, we can still theoretically hold the 20-week moving average, but still hit the 0.5 risk level, right? So that's still a possibility. So that's just something to consider. Someone says, what do you think about buying ADA below 0.5? It's not something that I'm really that interested in doing. I prefer to buy it below 0.4, but if you don't own any ADA and you're wanting, like, say, a hedge, and that's something to consider. Another thing that I'm going to talk about soon is DOT. Okay, so if you guys have been here for 5 or 6 months at least, we were accumulating DOT between $3 to $6, right? We were accumulating it between $3 to $6. But does that mean it's never worth accumulating again if it's above $6? Of course not, right? I mean, the risk levels are dynamic; they adjust. For instance, I mean, if we go back and look at ADA, the 0.4 risk level for ADA is now 20 cents. A year ago, or less than a year ago, it was 10 cents. So effectively, it's now, according to the risk model, it's now in accordance with moderate risk tolerance for ADA at 0.4 to buy it up to 20 cents, despite the fact that a year ago it would have been 10 cents. So with that in mind, is it necessarily productive to say that buying DOT between $3 to $6 is the only way to go about doing it? And I think the answer is no. I think as the market cycle progresses, if DOT does have dips down, it would be something we would want to take advantage of. And if the overall market remains bullish, then there's a decent chance that it doesn't go back to $3 to $6. But if it were to dump to say $7 or $8 or $9, does that mean it's not necessarily a good buy? I don't think so. So I think the one that I'm the most flexible on right now would be DOT, because DOT is one of those. I mean $16 is too high for me. But if it were to go back to like $8 or something, it might be worth considering in the event, with the mindset that the risk levels are dynamic, and if all the risk levels of these coins are moving up, it would seem somewhat counterproductive in the grand scheme of a market cycle to only ever accumulate DOT between $3 to $6. So for right now, I'm not accumulating it. $16 is too rich for my taste on DOT. But again, if we saw this back into, say, single digits, it might be worth exploring. I haven't really looked into the double spending thing. I don't know how valid it is. Obviously, if it is valid, that that generally would not be good for the market. If people start exploiting something, does anyone know? Has anyone looked into the validity of it? I have not looked into the validity of it yet, just to be completely honest. I just saw the news headline, and then I was busy for the rest of the day working on other things. So has anyone confirmed if it's valid, or I'm not really sure. Yeah, if it's not valid, then who cares? Yeah, so I think it's probably just not even worth. It's probably not even worth discussing. And if the market dumps because of fear over it, then that would just present an opportunity, right? That would just simply present an opportunity. Like if for whatever reason it gets out that people think that there's something wrong, and it does come back down, and people are running for this, running for the hills, that's where we come in and say, oh, that's an opportunity. Right, just like we did with Link. Remember Link, when Link was down, at $7, $8, $9, $10, it was aggressive accumulation according to the risk metric. Whenever it was below 0.5 risk, now that's history. Now Link is $20, right? It shows you that ignoring the news is generally useful, because it basically just stick to the. I like to stick to the risk metric. And you might say, well, what about XRP? The reason why that I paid attention to the XRP stuff was because I literally cannot sell it. And so if I cannot sell it on American-based exchanges, then what's the point of buying it, right? So that was why with XRP it was kind of different. This all assumes that you're able to buy and sell it. If that changes, then the game changes. Someone says, if you had no skin in the game, would you buy right now? Probably. Probably, because I wouldn't want to risk. I wouldn't want to risk not being exposed to crypto. So if I had no skin in the game, then yeah, I probably would buy some right now. I probably would. Basically what I would probably do is I would say I'm going to buy up to 0.6 risk instead of 0.5. I would say, you know what, I'll buy up to 0.6 risk, and I'll accumulate that way so that I can at least get exposure to the market. And you can see Ethereum is actually less than 0.6 risk. Link is at 0.6 risk. ADA is less than 0.6 risk. The only one that's not out of the main five, we could even say DOT is 0.6 if you want. The main one that's not is Bitcoin at 0.7. If you adjust for M2, it's 0.699. But I would probably go with a strategy that I would want to own more Bitcoin than anything else. So I would probably, if I absolutely had no exposure to the market, I would probably bite the bullet and buy Bitcoin. Um, uh, Basically saying, I missed the opportunity to buy it when I should have, but I don't want to risk not having any for the cycle. With that said, I wouldn't go all in. I certainly wouldn't go all in. I would probably just DCA it as long as it's below, some risk threshold, with the idea that I would hope it would go down so that I could accumulate more. But if I had no skin in the game and I wanted an exposure to crypto, I would probably just raise my risk tolerance for buys up to zero point 0.6 and then just do it. And as long as that's the case, as long as they're below 0.6, it would just be systematic buying. Yeah, I mean, with XRP, again, you know, in terms of its risk, yeah, I mean, if it hadn't been for the SEC, like this would be exactly where I would want to be buying it because it's below 1,000 satoshis, so it's below 10 to the minus 5. This would be the ideal spot to buy it, right? I mean, it would be, but I can't buy it anymore and I can't sell it. And so it's not a risk I'm willing to take. I don't care what it does. I legitimately, without doing stuff that you shouldn't do, I cannot buy it or sell it. So I just I don't want to deal with it anymore. Um, no, with the SEC, I would not buy. Because of that, because of the fact that I cannot buy it and sell it, there's just no point. Like it's basically like saying like like what's the point of holding something you can't sell? And yeah, I mean I get that Ripple could settle, but imagine the opportunity cost over the time it might take them to settle and move on. So yeah, I don't really plan on following this one until things change. So it's just as simple as that. Yeah, I like the private streams more than the public streams. The public streams I end up answering the same question constantly, and then when I don't get to every question, I get accused of ignoring questions, which I don't do. It's just how do I answer, 5,000 questions, and especially a lot of them are just like the same question over and over. So I do ignore those because I'm not going to answer the same question like 10 times in a row. Um, if we look at this chart, it's a few days old, but it's still relatively new. This kind of just shows you where we are in the grand scheme of a cycle. So in terms of the full cycle potential, I don't feel like we're anywhere close to where a macroscopic bubble top would be. Yes, we could be at a local top for a while, or we might not be. We might get an altcoin season. Bitcoin could go back above 42K next week, and it'll leave people asking who bought the dip. But in terms of a grand cycle, a market cycle, we're still fairly close to our fair value line. Like we're not even that close. I mean, one thing to consider is we probably won't come up to the green line. If you look at this one, we're far away from it, and this one we're just barely above it, and then in this one we come straight up to it. So this one will probably peak lower than the actual top. We could even have a double peak or a triple peak. Like this cycle had a double peak where it came up close to it and then ultimately came back down and then went like, up again later on. So I would say in terms of the market cycle, there's still a lot more potential for crypto. Um, so I still feel like we have a ways to go. What do I think that as far as M2, I really do have mixed feelings about the money supply. I mean, because there's other areas of the market where there's private cash. It's not necessarily factored into M2, and those things tend to just contract when the money supply goes up. So it doesn't. So the Fed, the Fed wants to increase the money supply, but there's other, there's private cash that tends to dry up more when this stuff happens. So it's not like it's necessarily accomplishing exactly what they want to accomplish. But I don't know. I mean, I don't know that it necessarily. I don't think that just getting $2,000 or however much people are getting is necessarily going to make the market go crazy. But I mean, if it does, it does. The great thing, right, is it doesn't really matter. I mean, as long as you just figure out what your risk tolerance is, just as long as you stick to that, um, it can more or less create like a, for me, it creates like a secondary income stream, right? Because you just, I mean, think about it, right? If you were buying Bitcoin up to point 0.5 risk, then you would have not been buying it above $12,500. And we were accumulating Bitcoin for years, and now Bitcoin is at $31,000. So even with a dump of 25%, you're still up 2.5x from where you would have accumulated Bitcoin according to moderate risk tolerance. How would I go about rebalancing my portfolio to be Bitcoin dominant when you are Ethereum heavy? Yeah, I'd probably just DCA Ethereum to Bitcoin. I probably would just systematically move some from Ethereum to Bitcoin during an Ethereum pump. And I would probably just do it dynamically, like maybe do a little bit early on, and then I would just scale it up. A lot of people have this question. Actually, in fact, my hunch, my guess, and you guys don't have to. It's a rhetorical question or a observation, but based on the people I've talked to, my guess is more people on the premium list own more Ethereum than Bitcoin. So I'm not going to call anyone specific, any specific people out, but everyone I've talked to, it seems, holds more Ethereum than Bitcoin. So that's just one thing to consider. I mean, I'm not saying everyone does. I just know that a lot of people I've talked to do. I mean, it's believe me, it can be fun. It can be fun being heavy in Ethereum until it's not, right? Until it dumps 80%, and then it's not so much fun. So it's all fun when it's trending up. And right now, I mean, right now it looks to be pretty strong against Bitcoin. The valuation of it is still relatively strong. So if your goal, if you really just if you operate in a deterministic manner where you assume that Bitcoin will go higher this market cycle and your goal is to get more Bitcoin so that you can sell Bitcoin at whatever you hope the peak to be, or you want to sell Ethereum at whatever you hope that peak to be, then you don't necessarily care about, fiat, and you just want to trade back and forth, then who cares that Bitcoin dumped 30%? Ethereum Bitcoin is still up, and despite the dump, if you had converted Ethereum Bitcoin to Ethereum in December, remember the end of December, you're still up 66.66% against Bitcoin. So going from, say, Bitcoin to Ethereum, you're already up 66% against if you had just held Bitcoin from the bottom of the wick, of course. Yeah, I mean, if I didn't have any crypto, I feel like I'd have to start with Bitcoin. Like, I'd have to start with Bitcoin because you guys see what it can do when it starts running. So, I would like to rebalance, but waiting for better timing. Yeah, I mean, one thing, again, I don't know if we'll make it there, but there's the 50 month, right? That was our top. And I'm not saying that would be our top. I mean, there's definitely a decent chance that it's not our top. But if you just wanted to reduce some risk, it was the top back in the summer. So if we make it to evaluation of like 0.0416 or 0.0415, that might be a spot to at least consider converting a small amount of Ethereum back to Bitcoin if in fact you own no Bitcoin. And then the other strategy, of course, is looking at the Ether Bitcoin risk and waiting for it to get to, say, 0.6. And currently it's at 0.546. Oh, and another thing, too, that I should say, and some people already do this, and I think it's a fine strategy if it helps you sleep at night. Um, one common question I get is, well, what if Bitcoin goes to 1.00 risk, right? Are you going to sell all of your Bitcoin? One thing you can do is you can have a profit taking stack where you follow the risk metric or follow whatever metric you want. You take profits. Remember, at some point you have to live life, right? And if if you need to buy a house or you need to buy a car, sometimes taking crypto profits can actually help with that. And also if you have a spouse, it can make them happy that you're actually doing something useful with the crypto profits rather than just watching it come and go. You can have say like profits, like a stack that you take profits on. But then you could also, if you want, right, if it'll help you sleep better, you could also set aside a certain percent that you just put in cold storage and you forget about for 10 years. You can do that as well, and I know a lot of people that do that. So again, you have to follow a strategy that works for you. For me, I don't really care. Like I don't really care if I own, like if the cycle gets so heated to the point where, like Bitcoin is up like 25x or something. Like to me, it's all about just the percentage moves. Like if I sell my Bitcoin at a certain price, and then it goes up a little bit more, like to me it just doesn't matter, right? I'm still profiting a lot on the moves that occurred, and at some point it will come back down to earth, and then I'll start moving in again, and then it's about the percent move from that point to the next level, right? That's how I think about it. I know that not everyone thinks about it like that, but that's how I think about it. I just think about it in terms of percentage moves, and crypto for me is a good vehicle to watch those percent moves go up rather quickly. I don't necessarily think about, oh, I have X amount of Ethereum or X amount of Link. I just think like, oh, it's a good time to get in. I'll get in. Oh, it's up 500%. Great. Maybe I should take some profits. Sorry, I missed a lot of the questions. Let me scroll back up and see. Yeah, so something people keep asking me are what are some other coins? So I don't really talk about these coins that much. I'm not buying XMR. I mean, I don't I would not buy it above point 0.4 risk anyways, and I haven't bought it in a while. So I have a small stack of it, but I'm not doing anything with it. XLM I did buy a little bit, a couple months ago or maybe a month and a half ago. I mean, they're above 0.4, so I'm not buying them. VeChain, again, above 0.4, not buying. Basically, if it's above 0.4 and it's an altcoin, I don't buy it, with the exception of Chainlink. And again, I don't consider Ethereum an altcoin. So these three coins are the only ones that I buy up to 0.5 risk. Everything else stops at 0.4, generally speaking. Yeah, again, I would not touch XRP at this point with the SEC. It's still theoretically, I mean, it's one of those things where, like, if it did shoot up, I wouldn't really be that surprised, but I can't buy it or sell it, so I don't really care, right? It's like, I just don't care. It's off limits. Litecoin, I certainly would not be buying it at 0.568 risk. Celsius, again, is one of those ones that I haven't bought in a long time, and it's done relatively well. But, moving into it at these prices is, of course, very risky, but it is one of the better performing coins in the market. The Uniswap token, I do own. and it was actually $3 not too long ago. It's $8 now. The general idea here is if altcoin, whenever altcoin season does occur, you could argue we've already entered into it to some degree. I mean, the Bitcoin dominance has dropped like 7 or 8% in a couple weeks. So this is one I have, but I haven't done anything with it yet. And I also own this one as well. I don't own any of these, and I don't really intend on buying any of them. No, I don't really have any interest in buying Dash or Neo. No interest in buying XTZ either. Atom is one that I have, flip-flopped on. I don't really want to buy it, but out of these four, if I had to pick one, I would pick Atom. And you might say, well, the risk level is 0.86. This risk level is completely useless. The risk confidence is 1. I guarantee you that if I made a risk metric on DOT, it would probably be flashing 0.9. So one of the reasons I don't put it there is because for new people, it'll give the wrong impression that it's very risky when in fact it's just that the risk metric is fairly immature. So again, that's why it says good luck. It's more to say, you know what, if we put it on there, it would be at like 0.9 because that's where it would be. It hasn't been around that long. So that's why we don't have it. Let's check the market here, see where things are at. By the way, in case you're curious where Ethereum 0.5 risk is, it's at 783. So if Ethereum, and I get that, yeah, like if you adjust for M2, it would be lower. I don't really care about it applying it to every single coin. For me, I'll just stick to the 0.5 risk level on Ethereum. 783 is where I would start. 783 and below would be accumulation for Ethereum. Above it, no, no thank you. I don't care if it trends up. It's too risky for me, and it makes it, by not chasing pumps, it certainly makes it a lot easier to watch it come down occasionally and not really care, right? You just don't really care. Do I think the short-term pump of Link cooled off? One of the things about Link is, I don't think that it necessarily is going to put in a local top and then trend down for a while. If you look at the last 2 peaks of Link, they occurred in the summer. So this one here occurred in August, and then this one occurred in June, and then this one occurred in January. So if you were to take, say, measured moves from these peak, obviously measuring peak to peak is somewhat dubious, but if you did, this is 500 something days, this is 400 something days. I wouldn't expect the next peak for Link to be like 165 days. I would probably expect it to be at least another several months out before we put in a local top before then coming back down. Of course, we could come back down in the short term, if Bitcoin corrects and then ultimately trend up later. But I certainly would not expect it to put in a one of these macro peaks quite this early. If it did, then great. I'm loaded up on it and I'm ready to sell it. But I would not necessarily. It's not like a day trading thing, right? It's you accumulate. We accumulated Link for off and on for 3 months, so we can't expect it to just shoot up from the 0.5 risk level to the 0.95 risk level in a couple weeks. It's going to take time. I don't really pay attention to the RSI that much. We look at it occasionally. I think it does have some use cases in terms of talking about overbought and oversold, of course. But at the same time, it kind of more or less tells you what you already know. But it is interesting that his discussion on it being above 95 or above 90, I think, and then it putting in a cycle peak a couple hundred days later. So we'll certainly keep an eye on that for sure. If we see us going back to an RSI of 95 or something, that'll certainly be notable. Brad says, lost my place. taking some profits now and again to show my spouse that I'm doing something useful is important. Yeah, that's the idea, right? Is like if all I ever did was just throw money into crypto and never saw anything out of it, then it's like it's just going into this this black box or this black hole, and then the rest of my family never gets to experience because they don't experience the euphoria that we experience, right? I mean, again, I'm probably not talking to everyone, but if you do have a significant other or something, that you guys depend on each other. If you're always just throwing money into this like black box of something, and they're not really experiencing the euphoria of it going up, then whenever it does come crashing back down, you kind of have to answer to why you never took profits. But that's definitely getting onto a tangent that will not apply to everyone. So we will come back. How aggressively would I start accumulating Bitcoin if it approaches the 20-week MA? Probably fairly aggressively. I'll let you guys know, but I already have some buys down at the 20-week moving average to get back. I don't remember exactly. I mean, it's somewhat wishful thinking because the chances that it actually goes to the to the 0.5 risk level or the or even the 0.525 risk level if you want to adjust for M2, the chances that it does that immediately are relatively low, so that by the time it does get there, the prices could be elevated. But I do have buys set up at those levels so that if it were to dump and I'm not by my computer, or the exchanges crash, like they like to crash when there's a lot of volume, like I know that I have buys set up, and those buys that I have set up it wouldn't necessarily accumulate all the Bitcoin that I sold, but I think probably like 30, at least 30 to 40% of it, I already have just set up to buy if it were to drop to that level. Do I invest more in crypto than stocks? No, I invest a lot more in stocks. Yeah, I invest a lot more in stocks. It's just one of those things. But I'm not crypto can help you increase your net worth. But if crypto drops by 90%, you don't want your net worth dropping by 90%. So that's just something to consider. There's the downside risk. It's all fun and games when things are going up, but is it worth the risk of losing 90% of your net worth? I don't think so, right? Because there does exist a universe where the prices plummet 90%, right? That has to be a theoretical outcome. And if it's a theoretical outcome, then I don't want to put myself in a position where my net worth could drop by 90% by being completely exposed to crypto and nothing else. Yeah, I have looked into DeFi some, and I mean, some of my main exposure to DeFi is are these two tokens. But I know there's other tokens out there, and I get requests all the time to cover other tokens. It's just that a lot of these are relatively new, and they're not going to have risk levels anyways. A lot of you guys already own them. To some degree, some of them are just chasing whatever the flavor of the day is. But I'm sure some will rise to the ranks, and we'll talk about them more. What are your accumulation ranges for Celsius? I'm not accumulating either of them, honestly. I have positions in both, but I'm not accumulating either of them. I did buy some uni when it was like $3 or something, but I'm not buying any of them right now. Have I put any study into when the market could turn bearish based on past statistics? I mean, if Bitcoin breaks through the 20-week, it'll become very bearish. So that would become very bearish. Why do I think Link is worth buying above 0.4? Well, I mean, it's more or less just saying, like how many coins have broken through their 2018 all-time highs. Link broke through its 2018 all-time high, about a year and a half after it. Most coins aren't even close to their 2018 all-time highs. And Link is, at the current price, it's over 11x up from its 2018 all-time high. So I accumulated below 0.5 risk against USD because, historically speaking, it's one of the best performing coins. And if I hadn't accumulated it below 0.5 risk, if I waited until below 0.4, I would have missed out a ton because it's moved back up significantly. So you can see this is a good example of accumulating it below 0.5 would have been better than waiting until below 0.4. How did I determine Link, ADA, and DOT? I mean, ADA is a hedge against Ethereum, and it's a decent trade against Ethereum. Link is a good trade against Bitcoin. And DOT again, we don't talk about the F word a lot, fundamental analysis, but it's more or less a bet on Gavin Wood and the idea of what he's building out than anything else. And there are projects building on top of it. So I would say it's more a bet on a person rather than specifically that. It's kind of a similar thing with Cardano, in fact, like betting on Charles to some degree. Like some people, kind of like Elon Musk, right? Some people just like to bet on that person because they believe that person will get the job done. So a lot of times for me, I'm betting on someone that I think they have what it takes to grow it, right? They have what it takes. Yeah, I mean, if you're new to the space and you're wanting just exposure, I mean, yeah, like I'd probably pick up a bag of all 5 of these. I'd DCA. I wouldn't go all in because the risk levels are relatively high, and I would hope the risk levels would come down if you're just starting to DCA. But I probably would pick up a basket of all 5 of them in order of importance. All right, so in order of importance. And you might say, maybe you could argue, increasing DOT percentage. The issue, I mean, now it all, I mean, when I said DOT, when it was at $3 to $6, now that it's at $16, it seems like a true winner. But I mean, ADA has also gone up significantly. I mean, it's up like 16x in 10 months. So we can't discount that. How's the Oh yeah, so we are working on the app. It'll be out in Q1. It should be out in Q1. So I don't know exactly when, but maybe I don't want to say exactly. I mean, it should be out before April. I already have it. I mean, we'll show you guys later. I mean, it's being built out. I don't even know if I have the, yeah, it's changed some recently, but I think, I don't know if you guys can see, I can't really see if you can see that or not, but someone says, do I think we can find an opportunity at 0.49 or less on Bitcoin? It's funny because if you guys were on the people that followed me a year ago, I kept saying that we're going to get to this point where everyone's going to look back and wish they had bought more. This is a prime example. It will eventually get below 0.5. I don't know how long it will take. And again, if you find yourself underexposed on the market and you want more exposure to crypto, you can simply raise your risk tolerance. You don't have to be as risk averse as me. I would argue that I'm probably one of the more risk-averse people in crypto because how many people out there stopped buying Bitcoin at 12.5K, right? I mean, probably not that many people. I just do it because I don't want to get burned, and I would rather be safer with my money and still maintain the upside, and then I don't have to worry about crashes, right? Because even if it were to crash to 20K, yeah, so what? Yeah, my stock allocations are, I mean, most of it, to be honest, are in mutual funds, FC Rocks and FCILX. Also FNILX. I have some in ARCG. I do have some small positions. They're not necessarily that small, but I have some other ones in like uh, ARC K as well. But I mean, you have to be risky with some of the ARC fund, or you have to be careful with some of them, especially because, some of them, like one of them, Tesla is like the majority holding, and I feel like Tesla is completely through the roof right now. The genomics one, I think, is relatively a good bet in my opinion. And actually, I think over the last 2 weeks, since we've been talking about the ARC funds, I'm pretty sure ARC G has been the best performer. I think. Don't quote me on that. And maybe someone can check to make sure I'm telling the truth. But I think over the last 2 weeks, ARC G has been either the top performer or one of the top performers for the ARC ETFs. Yeah, I don't like coffee. But remember, what did we say? Even if Bitcoin corrects, alts can still run. So, like, if Bitcoin were to sit here at 31K for 3 weeks, I imagine a lot of altcoins would do quite well during that time frame. So it's because it's still so far overextended. But one of the things we've showed before, and you always have to maintain this. It's always good to have a couple koala bears. If you're a bull, just have a couple koala bears next to you to just always keep you in check, right? It's always good to look at the big picture and say, yeah, like there's a good chance it just bounces back up. But there's also a good chance that it comes back down to earth for a while. So just keep that in mind. Um, this is a pretty nice sell-off right here, from 35 over 35K down to 30K in a day. So, as so far it has been trending down. Um, and if we did bounce here and ultimately kind of fill out this little useless triangle that I drew, I mean, it could take us to mid-February potentially. And I mean, if it did, I bet a lot of altcoins would do quite well during that time frame. I actually am planning something for 100,000 subscribers, but I don't really know how I feel about it. I'm curious what you guys think about it. Actually, I'll ask you guys. So I'm planning on launching like, um, uh, I don't know. Um, I was just gonna. I mean, I think I've already said it before, but um, like I thought it'd be cool to like, yeah, go talk more about like NFTs and stuff, like like non-fungible tokens, because there's a lot of interesting stuff in that space where people it's like an investment. It's like an investment opportunity. Um, there's a lot of people. There's a huge market for non-fungible tokens. Um, so I was gonna start talking about that and maybe even launch my own. Not like a cryptocurrency where I'm airdropping it or anything like that, but just where you have like a piece of digital art or something, and there's like an NFT that proves you have ownership of it. So I thought about maybe toying around with that, because I think there's enough garbage coins out there. But the idea of NFTs really intrigued me. Like the idea that a token on the blockchain could prove you own the mortgage, that you own a house or that you own a car or that you own a piece of digital art. Like I think that's a really cool use case. And non fungible tokens are actually it's an investment opportunity. I don't know if you guys follow I don't know if you guys follow NFTs, but there's a lot of people like buying artwork for like $1,000 and then flipping it a few days later for $3,000 and stuff like that. So it's a market that I know is not going to appeal to everyone, but I have done some research into it, and I think it's intriguing, the idea of this future world where you can prove you have ownership of something just by showing on the blockchain that you have ownership of it. So I don't know. We'll talk more about it later, but and art, in France, I don't know if you guys know this, but like in France, uh, there was like I think there was like a wealth tax, right? But they made it at one point a while back so that like art was not taxed, I believe. Don't quote me on that, but I think it was like so that was not taxed. And then it sent art prices through the roof because, a lot of wealthy people just wanted to buy up the art so that they could write it off on their taxes, or they didn't, they weren't going to be taxed on it. Um, but that was in France. But I do think the general idea of NFTs is a really cool idea. Um, and I've been meaning to talk about it more, but yeah, we just haven't done that yet. Let me know that I'm gonna let me find something really quick. All right, I'm gonna link you guys to a YouTube channel. This guy has 14.6 thousand subscribers. Um, but the cool thing about this guy is he made the Into the Cryptoverse logo. Okay, so he made the logo like I don't know, like a over maybe like a year ago. But his channel, it talks a lot about NFTs. So if you guys are interested in it, you could check his channel out. I'll go ahead and just post it in the chat. His name's Rhett. Why do I hold the specific mutual funds that I mentioned? Is because their expense ratios are zero, and there's 0.0%. And there's a lot of research showing that the lower the expense ratio, the better it performs actually. So you get the best of both worlds. You have zero expense ratios, and historically, lower the expense ratio, the better the performance. Um, at least after you account for the fees, not necessarily before you account for the fees, but after you account for the fees. So, and it gives you exposure to the entire market. Yeah, FZ Rocks is domestic, FCILX is international, foreign. Yeah, so we will probably do like an NFT or something. Um, I don't know if we'll do it exactly at 100,000 subs, but probably somewhere around there. Just because I want to explore that space, generally speaking. Someone says Ben just convinced me to set a buy order at Bitcoin at 17,832. You never know. It's true. I mean, back when Bitcoin dumped to the 300-week moving average, I had some buys set up that low. Not, I mean, I didn't catch it at the bottom by any means, but I had some buys that were set up, down in those levels, and I didn't think they were gonna get hit, but They did. So it's, it's one of those things where if you see the market dumping, you don't have to frantically log into the exchange. You know that you have buy orders set. No, we're not doing t-shirts. The only reason I'm considering I'm thinking about like the NFT stuff is because like I think it's actually a really cool use case of blockchain. Making t-shirts is completely useless in my opinion. No, we're not doing swag. If you want to buy the lifetime sub and you paid for a few months already, yeah, it's prorated. No, I don't like tea. I don't like tea or coffee. Go figure. See, the reason you shouldn't buy merch, right? I mean, the whole idea. I think about it. If you invested that money, it'd probably go a lot long. It'd probably go much further along than buying useless T-shirts. Um, yeah, I don't really want to deal with that stuff. Looks like the market's kind of calmed down a little bit, so it's funny to say that when you look at like this candle right here, but at least for this hour, it hasn't really moved that much. What ratio of U.S. versus international stocks do you hold? Actually, I don't know if I've ever said that before, but that's a good question. It's 50-50, actually. I split them 50-50, and I like if one goes up and I see one is kind of outpacing the other one slightly, I just put more on the other one, so I just keep it at 50-50. Yeah, I'll get to the silver risk metric soon. The thing is like, like in terms of risk adjusted returns, like I don't like saying it because I know a lot of people in crypto also like to hold gold and silver, but in terms of risk adjusted returns, gold and silver are historically are not that good to hold. I mean, like they have good runs, right? I'm not going to claim that they don't have good runs. They do have good runs. But if you're looking, just based on all the historical data that we have, equities generally are much better than metals. Again, that's just the truth, right? That's just what it that's what it is. Like I don't control what it is. I just tell you what it is, and that's what it is that equities generally are better than metals. And so the amount of metals that I hold is really a really small percentage of my portfolio. I'll try to get to the silver one soon. If crypto is calming down for a few weeks, I'll try to get the silver one done. The two mutual fund I'll put them in the chat so you can see them. There's also another one. There's also if FNILX too, but I have a smaller position. All right. I mean, um, yeah. I mean, maybe you could think of it as preserving wealth, but yeah, actually, the dollar took a hit today. It's back down to 90.1, which is interesting. This is, most days they behave opposite, but today both Bitcoin and the dollar fell. I mean, I'm sure it's happened before, but you just don't often see that happen. Someone's asking for an updated link to the risk dashboard, so I will go ahead and grab that for you and post it in the chat. Do I think I'll still be doing YouTube videos in 5 years? Yeah, I don't think I'm going to be publishing 3 a day like I have been, but I think I will. I'll probably do, I mean, as I said, I'll do more and more private video, like premium videos as time goes on. Um, we can take a look at the dollar really quick. Let's go take a look at the dollar. Yeah, so this is basically the same area where it chopped sideways, right? From January through April, okay? So it might do the same thing. This is something we've been saying. This is where it chopped sideways for a while 3 years ago, and it's because of this surge in DXY that we were speculating was also causing Bitcoin to go down. But of course, today they both went down. I actually don't drive a Subaru. My wife drives a Subaru, and her old car is a Subaru. Well, I guess I sometimes drive her old car. It's an '01. I don't like to drive the new car because I don't like dealing with keeping it in pristine condition. At what point do I reset my stop losses that have been hit after it's come down? Yeah, like if the risk levels come down and then I start accumulating again, I just completely reset all the stop losses. Yeah, I drive a Chevy, an '07 Chevy. And when it dies, I'll drive the '01 Subaru. Would it be uncouth to inquire about premium-only chess streams? We have played chess on stream a few times. Yeah, the risk level of damaging the new Subaru is pretty high. And I don't want to deal with accidentally damaging it. Push it to the left. Do I have any extravagant expenditures? No, not really. I mean, daycare costs. It's probably the most extravagant expenditure I have is the cost for daycare or babysitters for 3 kids. Do I also play the German? Yeah, I think I played Puerto Rico. If you look in the background, I have a lot of board games back there. Actually, one of them is Puerto Rico. Yeah. I don't know if you can see it. That game right there is Puerto Rico. My video is too small. Can you see it now? Can you see the board games now? There's a lot of games over there. Through the Ages is my favorite one, though. Through the Ages, Agricola, Terra Mystica. That's a good one. Terraforming Mars. Yeah. Yeah, market's not really moving right now. By the way, the stops that I had on Ada and Link were hit. So I think I mentioned that earlier. So I don't even have any open stops now. So they were hit. Ada was 34 cents or so, I guess, around 34 cents. And Link, where was the stop on Link? I don't even remember where I set it. It was at 0.6 risk for Link. So 0.6, so at 19.59. I took a small profit on Link. So right around the current price, in fact, is where I took a small amount. I mean, it was not a ton. It was 1/30th. But remember, I mean, I was buying Link at $7 and $8, but actually, the Link that I sold is Link that I bought over a year ago, because I like to keep mine to long-term capital gains if I can. And if you guys remember in the Link bubble of last summer, I only sold 2/3 of my position, so I still had 1/3 of my position. And because I still have it, there are some gains on Link that I can take, which are long-term, which is what I shoot for. I don't generally talk about taxes because it depends on your own situation, your own country, your income level, etc. But generally, I think it's a good idea to shoot for long-term if you can. If you're like in the United States or something. So that's one of the reasons why I don't really want to sell DOT, is because I don't want to pay short-term capital gains on it right now. I might do other collaborations with other YouTubers. I don't really know. Like, I don't really want to promote anyone that like is shilling leverage trading and all that stuff. Like, a lot of the guys have 15 links to Bybit or Femax or whatever it is, and I don't want to go down that rabbit hole, and I don't want to shill people who do. If you guys know of anyone that doesn't do that stuff, then I'd be happy to look into it. But most people in the space do that, right? Their words are paid for too. A lot of their, like, in promotions, their words are paid for, and I don't really want to work with people like that. And it's not necessarily that like they're a bad person, right? It's just that like it's a way that people that watch it can get into a lot of trouble because they don't know what they're doing, and then they go lose all their money. I mean, if you guys know of other YouTubers that don't do that stuff, then yeah, I would say it's a possibility. And the reason I know it is because all the people, like all the places that they promote, those same people have reached out to me to promote their stuff, to put it nicely, right? But Um, I don't know who Arcane Bear is. I'll check him out. See, the problem, this is the cycle. This is the vicious cycle, right? Someone takes a paid promotion or they do an affiliate link. If they're doing an affiliate link, then they need to increase their views so they can increase, the amount of people clicking that link. And then they have to talk about, then they actually show like themselves shorting and longing on these exchanges to make it so that people FOMO in and do it so that when they do it, they get paid an affiliate commission. But a lot of these people end up losing their money. So these YouTubers, the people that they're claiming to try to help, they're actually a lot of times they're hurting them at the and they're then benefiting from it. So that's why I don't want to go down that rabbit hole. Someone said, "Can I play my son buy Bitcoin?" Yeah, let me find it. Okay, I'm gonna play it. I will warn you. You should turn your volume down. If you have earphones in, it will be loud. So maybe turn your volume down. I have to turn it up, otherwise it won't pick up. But I will play it.
Buy Bitcoin. Bitcoin. Buy Bitcoin. Buy Bitcoin. Bitcoin. Buy Bitcoin.
Alright, there it was. Not financial advice, of course. That was actually made by Ryan. I did not make that. There's a guy named Ryan in the chat who made that. Alright, do you guys want to wrap it up? We've been going for, what, an hour and a half? Yeah, my son likes the song. I'm not going to sleep yet. I feel like we've been going for a while. We'll wrap it up here. Hopefully you guys like these live streams where it's kind of calmer and we just look at the markets. We'll probably definitely, I mean, when things when things are chaotic, we'll try to do some of these. But all right, hopefully you guys liked it. And we'll do it again maybe in a couple more weeks. So thank you guys for tuning in. I'll see you next time. Bye.